All right, let's dive into something huge that just dropped from SEBI. It's a brand new system that's honestly going to be a game changer for every single investor in the Indian securities market. We're talking about a whole new way to handle disputes that's faster, simpler, and way more accessible for everyone.
You know that sinking feeling when you check your trading account and see a transaction you know you didn't make? Or maybe you're waiting and waiting for a dividend payment from a company that's weeks overdue. It's these kinds of headaches that can really test your patience as an investor.
Well, here's the great news. The whole tangled mess of trying to solve these problems has just been completely overhauled. What used to feel like navigating a maze is now a straight, clear path to getting things sorted out.
So, here's our game plan for today. We'll start by looking at this new way of doing things. Then, I'll introduce you to the star of the show, the ODR portal. We'll break down the two main steps, conciliation and arbitration. And finally, we'll get into the nitty-gritty of costs and timelines. Let's jump in.
To really get why this is such a big deal, you have to remember the old system. It was often a confusing patchwork of different processes, depending on who your complaint was against. SEBI's big idea was to sweep all that away and build one single unified system for everyone. And that solution, the hero of our story today, is SEBI's Common Online Dispute Resolution Portal, or, as we'll call it, the ODR portal.
So, what is this thing really? The easiest way to think about it is like a single front door for any dispute. It's a one-stop shop, completely online, that uses two very effective tools to get things resolved: conciliation and arbitration. Now, what's really incredible here is just how wide a net this portal casts. Who's covered? Basically, anyone you'd interact with in the market. We're talking your stockbroker, your depository participant, the listed companies you own shares in, even your mutual funds and portfolio managers. It is a massive safety net, and it's built for you, the investor.
Okay, so how does this journey actually play out? This is super important. The ODR portal isn't your first stop. You still have to try and sort out the issue directly with your broker or the company first. If that goes nowhere, you then escalate it through SEBI's Scores portal. It's only after those steps fail that you bring your case to the ODR portal.
Right, so once you're in the ODR system, the first thing that happens is called conciliation. Just think of it as a guided conversation, a chance for everyone to, talk it out and find a solution together.
The whole idea here is to avoid a big, messy fight. A neutral expert, called a conciliator, is brought in. Their job isn't to pick a winner or loser. Instead, they help both you and the other party find some common ground and hopefully agree on a fair settlement.
And here's one of the best parts. This system is built for speed. The entire conciliation process is meant to be wrapped up within just 21 calendar days. It can be stretched by another 10 days, but only if both sides agree. This focus on a quick turnaround is a massive improvement. But what if talking it out doesn't work? What if you just can't agree? Well, that's when the process moves to the next stage, arbitration. This is where you get a final, concrete decision.
Now, this is totally different from conciliation. This isn't about negotiating a settlement anymore. In arbitration, a neutral expert, the arbitrator, listens to both sides and then issues a final, legally binding decision. It's called an arbitral award.
And, you guessed it, this part is also super quick. The arbitrator has to make their decision and issue the award within just 30 calendar days. Again, the whole system is designed to be efficient and stop things from dragging on forever.
So, let's just quickly put them side by side. Conciliation is all about negotiation, aiming for a settlement. Arbitration is like a mini trial, aiming for a binding decision. Two very different steps, but part of one smooth process for the investor.
Now, I know what you're probably thinking. What if the company just ignores the decision? Well, SEBI has made sure this system has some serious teeth. For a company to even challenge a decision, they have to deposit 100% of the money up front, and if they don't comply, they could face serious action, even risking getting their license suspended or canceled.
Okay, let's talk brass tacks, the practical stuff every investor wants to know. What is this going to cost, and what are the important timelines you should be aware of?
And here it is, maybe the best news of all. To get this whole process started, to register your complaint on the ODR portal, it costs you absolutely nothing, zero. It's free for the investor to file a case. Now, during that first conciliation step, there are some fees involved, but, and this is a big but, those costs are paid entirely by the market participant. That's right, the broker or the company pays, not you.
The only time you'll have to pay a fee is if your case moves to arbitration. And even then, the fees are set based on how much money is in dispute. But here's the kicker. The final decision almost always orders the losing party to pay back the winner's fees. So if you win, you'll likely get that money back.
So let's wrap this all up. What's the bottom line for you, the investor? The advantage is huge. It's fully online, so it's accessible. It's time-bound, so it's fast. The decisions are binding, so they stick. It's low cost, starting at zero. And it's all in one place. This really is a giant leap forward for protecting investors in India. And that really brings us to the big forward-looking question, doesn't it? This whole system is designed to make the market fairer and more transparent. But will a powerful tool like this actually help build more trust between investors in the market? Well, only time will tell, but there is no doubt it is a massive step in the right direction.